What's going on, people? Back with a bang, it's TWP. In today's video, we're going to be talking about 5 things to do before you get in a trade. Now, this works for call outs, it works for alerts, it works for your own trades, it works for whatever you're taking, right? If you're trading, swing trading, day trading, maybe not everything is relevant to long-term investing, but definitely trading, swing trading and day trading, this is what you need. So realistically, we know that, in this day and age, there's so many different ways to trade. You've got bots, you've got AI, you've got alerts, you've got your own trades based off what you like. And either way, the main thing here is I just want to let you know this works for all kinds of trading, and you need to implement this in your trading if you actually want to improve. Now, starting off, I'm on TradingView, but I did want to say, just a side note, Microsoft has dropped during the earnings, Meta has risen during the earnings, and this is kind of what happens during the earnings, right? You get huge moves, right? Last week I said I was bullish on Meta and it flew. I also said I was bullish on Microsoft and it dropped. So it can go either way. But either way, let's get straight into the video. So, 5 things you must do before you get into a trade. And first is identifying the trend. So right now I'm going to pull up silver SLV. Everyone can clearly see that this is bullish, right? Now, a couple times this week I've heard people say, silver puts, time to short silver. What are people smoking? Why would you want to short silver right now when the trend is clearly bullish? So that's why I said this is point number 1. If you want to take a trade, if you want to make a play, identify the trend. This clearly here is above all the EMAs. Each day is green. Each week is even more green. And there's nothing here that tells me I want to short this stock. Now, yes, there are going to be pullbacks. It is going to get, sold off at some times because of people taking profits, but it's very clearly bullish. We were at, I think, $83, $84 last week. And I said, my price target is 100. It's now at 108 pre-market today. I'm telling you, if you want to trade, if you want to make some money in this market, identify the trend. There's no point just, trying to make trades based off what you feel or what you think is going to happen, or I'm going to take puts because something has ran so much. That's not how the market works. Anyone that took puts here got clapped, here got clapped, here got clapped, here got clapped. If you're trying to take puts on something that's flying, good luck to you. So like I said, no matter what you're trading, right? We've been trading Exxon a lot recently, so we've been trading this. Again, look at the weekly chart. Very clearly bullish, right? Daily chart, clearly bullish. We said our price target for this week is $140. We are 19 cents away right now. It's very clearly bullish. I don't care what anyone says. Trying to short this is not realistic. So you must identify the trend. No matter what trade you're taking, identify the trend. Look at the higher time frames. Look at what's been happening on the weekly, the daily. Maybe sometimes, if you're taking a long enough swing or a leap, maybe even look at the monthly chart, okay? And again, if you don't identify the trend, you're not going to be, you shouldn't be surprised when the trade goes against you because you're trying to trade against the trend. 2, find ideal entry price points. So here I have the S&P 500 SPY. If I want to trade SPY, my entry shouldn't be on the 4-hour. My entry for a day trade shouldn't be on the 1 hour. My entry should be on the lower time frames, the 5-minute, the 15-minute, the 10-minute, the 30-minute. So here I've got my levels, right? Here is a great time to short it for a day trade. Here previously was another good time to short it for a day trade. Here, this reversal spot was a good time to take calls, right? And even this isn't even the clearest trade of all, right? There are other trades which are a lot more clear. Not this. Here's a better one. So ASTS, right? AST Space Mobile. If I want to enter this trade for a day trade or a swing trade, right, I can identify a double bottom pattern here on the 5-minute chart. I can go to the 15-minute chart, identify some consolidation before we took off, right? Find entry points on the pullbacks to the EMAs. If I want to take ASTS calls, I know it's already been running because we'll go to the higher time frame. It's been running, right? It was $108 a couple of days ago. It's now $121. So I know it's been running. So I don't want to buy in when it's way up there. I want to buy in when it pulls back. So again, here, pull back to the EMA. Here, pull back to the previous level of support, which helped it form the double bottom on the 5-minute. If I go to the 15-minute chart, again, pull back to the EMA, right? Also looks like, there's levels of support and resistance forming all around the chart, and you can use those levels as well. And it goes for pretty much any stock that you trade. If I pull up Amazon, we traded this from Tuesday this week to Wednesday, swing trading it. Okay, so Tuesday this week, right here. So obviously Amazon broke out after the consolidation. This is the 50-minute chart, right? Broke out after consolidation. We want to enter the trade. We don't enter in up here. We're far away from the EMAs. We entered here, close to the EMAs, right? And we just let it ride out. Why do we do that? Because we want to find the ideal entry point. If you get in up here at 243 or away from the EMAs, or just anywhere while it's already pumped before people start taking profits, guess what? When it pulls back, to 241, 242, obviously you're going to be losing money on your contracts. And if you're trading regular shares, you're losing money in shares. You're not getting the ideal price point. Now, I've got a different point, which is, going to be relevant to this yellow line soon enough, but we'll not get into that yet. But like I said, find ideal entry points, because every single trade you take, you want to be maybe down maybe 5 to 10% max before, it takes off. If you're down 30, 40, 50% before it takes off, it's a lot harder to hold, especially if you're using a small account. It could be really tough to see the drawdown, on your account. If your account's down 20%, 30% within, minutes, it's horrible. So you want to find the ideal entry point. Ideal entry points for me come near levels of support. They come near, EMAs. No matter if you're taking puts or calls, it works both ways, right? So yeah, find ideal entry points. There's never going to be a time where you get into something and it's going to go straight up or it's going to go straight down, if you're trading calls or puts. But there are going to be times where you get into a trade and it goes the opposite way. Now, it's okay if it goes the opposite way, but how far the opposite way is it going to go, right? Here's some wicks. If we go to the 5-minute chart, we look at what happened on Tuesday when we got into the trade, right? Yeah, it pulled back a little bit sometimes after our entry, little bit, right? I remember I bought contracts for about $144 and they jumped down to, I think, $128. But before we knew it, they were back up $200, ended up the day $350, each contract. And then yesterday they gapped up again. Now, my point is, again, if we didn't find the ideal entry point, right, we got in at, way up here, let's say, and it pulled all the way down here, would be a lot, we'd have a lot to worry about, and probably, people would probably sell, all that kind of stuff. But because we got in near the EMAs, it was okay. The drawdown wasn't too crazy. And of course, that entry point was the deciding factor there. So find a good entry point. 3, find a plan. Confirm your plan, right? Decide what your plan is. So we'll just stick with Amazon because that's the one that we're talking about right now. So the yellow line, right? And the yellow line is going to be relevant now and also in my next point. What's the yellow line there for? Well, let me zoom out for you. Okay, so at the beginning of this year, 12th of January, we hit that, that price point and we reversed. That price point was now a level of resistance, right? A reversal spot. Amazon dropped over $17 after hitting that level. So this time we said, when we take calls at a level of support and we take it up, back up to the top, we have a price target here. Sure, it can break out and go, to previous levels up here, but we at least have a first price target. So again, having a plan with this one is, hey, we're getting into Amazon calls. They expire next week. We've got enough time on our contracts, but at the same time, we do have a strong resistance there because it's the previous level from this year, right? The previous highs of 2026. Now, Amazon did hit that spot, and of course it did reverse. And funny enough, it hit the exact same price point as it did back here in January, on the 12th of January, a couple of weeks ago. Now, there's nothing wrong with, having a trade and trying to get a trade and trying to make sure that, you can get the most out of a trade. There is something wrong if a trade hits this level and it comes down and you don't know what to do. Why is that? You didn't have a plan. Again, having a plan is, I'm taking profits at this level. I'm cutting losses at this price point. My max loss tolerance is 30%. My max pain is 40%. I want to trim 5 contracts when we hit the first price target. I'll trim 2 contracts when we hit the second price target. I'm going to take 10 contracts and then, 8 of them are going to be runners, or I'm going to take 10 contracts and 3 of them are going to be runners, or whatever it is. But you have to have a complete, concrete plan. I've seen too many traders, especially new traders, rely on call-outs, alerts, bots, signals, and whatever else, instead of relying on their own plan. Now, it's not to say you can't take call-outs or alerts or anything like that, But if you don't know when you're selling, right? If you're up 150% and you don't know when you want to sell, well, how are you going to, manage a trade when no one else is going to be telling you what to do, right? On the days when no one else will be there to tell you, yeah, I'm still holding, yeah, I'm selling, yeah, I'm doing this, yeah, I'm doing that, my next price target is that. You need to have your own plan. There's nothing wrong with following people, right? We've got plenty of people that lead Discords and Telegrams and all that kind of stuff. But if you don't ever have your own plan, how are you going to take a trade and how are you going to manage that trade? If I'm up 180%, that might be the biggest trade I've ever done in my life. But if you're up 180%, that might be nothing to you. But am I going to rely on you for when I sell? Of course not. I'm taking profits at 180% because that's the biggest trade I've ever seen. You might look at that trade and say, that's rookie numbers, I want 500%, right? That's you, that's your business, not my business. And vice versa. I might see a trade and I'm up 45% and I say, that's rookie numbers, I'm selling that. You might be in a trade with 10 contracts and say, wow, these 10 contracts are up 45%. I've never had 10 contracts that are up 45% at once. I'm going to take profits here. It's your trade at the end of the day, right? No one is telling you must hold. No one's telling you must sell. No one's telling you what you must do because it's your portfolio. You're the one who clicks the buttons. You're the one who put your personal data in there, your information. That's all you. So again, go into each and every single trade with a plan. If you're not going to go into a trade with a plan, don't go into the trade. Don't take the trade. If you're going to get into a trade and you don't know how to sell it, don't know how to manage it, don't go into a trade. So that's one thing you definitely need to do before you go into a trade. 4, be patient. Now this kind of goes hand in hand with point number 2, because if you want to find an ideal entry price point, you need to be patient. Okay. So we traded Apple this week and some people got into play, some didn't, but it's not about that. It's about patience. So why did we get into Apple? First of all, if I go back to the daily time frame, right? We bounced on my level of support. We bounced around the 200 EMA and we start to move up. Okay. So the first thing I want to highlight is, again, we bounced on my level of support. We were not in the trade here last Friday. No, we got in on Monday. Why? We wanted to make sure that this bounce was real. Now, it gapped up overnight on Monday and we're like, okay, our patience has paid off. Yes, we wanted to get into trade last week, Friday, and it would have been a great trade. But we were patient because at the same time, Apple had so many red days in a row, kept selling off and kept, reaching lower lows. We thought, is this a fake bounce? Indeed, it was not. So it's fine. We were patient. We waited till Monday to take the trade. Now, Monday came around, we took the trade, and guess what? We saw returns. It gapped up, hit the 200 EMA, we went to test the 200 EMA, and then sold off. Now, here's where patience really comes in handy, okay? Let's say last Friday, we had got into Apple calls, okay? And we swung them over the weekend, and then Apple got rejected at the EMAs, sold off, gapped down this week, Monday. We'd be in a deficit. We start the week with a loss in the red. On the other hand, if Apple does gap up, we don't lose anything because we're not in the trade. It's fine. And we can still take the trade because the move is not finished. Now we got into the move Monday, went from 252 up to 262 by Tuesday. And again, I think that's what, that's highlighting the importance of patience. Some people will think, I should have got in Friday and missed the move. Others say, you know what? There's a second opportunity here to get the next part of the move. I just need a piece of the move. I don't need the whole move, which is what we did. And you make some money. So again, be patient. A lot of people trade without any kind of patience. They jump in the first 5, 10, 15 minutes of the market, no patience, end up taking a loss. Some blow their portfolio in the first hour or two of the markets just because they're not trading with any patience. Same when you're in a trade and you want to see something happen. Be patient. Have your plan in place. Have your stops in place. Make sure you know what you're doing before you just jump in, anyhow, or before you sell out anyhow, or whatever you do, right? Most important thing is that you are patient with your trades. All my best trades have come from patience, right? There is a ticker right now that's been going insane, and that is SNDK, right? And I think this thing will hit 550 pretty quickly. But either way, right? For those who got into this at any kind of price point, it's above all the EMAs, right? Remember point 1, identifying the trend. For anyone who got into this trade, right? If you got into calls, hopefully you did because it's bullish, right? Even when it pulled back to these levels, these EMA levels, hopefully you were patient and let the trade ride out because it would have paid you. Even when you got in here, which is not our ideal price point, but again, even if you did get in, when it was overbought and it pulled back to the EMAs. If you were patient, you were rewarded, right? This was Monday, okay? Monday, it jumped up, Tuesday, because of Martin Luther King Jr. Day. It jumped up Tuesday, right? Continued. People got in, they're like, okay, I need a bigger move. It jumped up, continued. People got in, jumped up, continued. Some people got in and they had to hold through this chop. But guess what? It worked out because they were patient. Entries, you got to be patient. Exits, you got to be patient. No one is forcing you to take any trade. Do not rush into a trade. It is not worth it, right? I'm telling you, my best trades have come from patience. The IWM that we've been smacking in the past few weeks come from patience, right? Turning $150 to $5,600 come from patience in the plays. Great puts yesterday, great puts last week, great puts, opportunities for IWM. If you were patient, if you tried to get into calls up here, you got cooked. If you tried to get into calls anywhere around here, you got cooked. If you were patient, wait for the time, to get into the play, you'll see that it was clearly puts. Now, if you're patient and you wait for the right time, you will see when IWM does start to recover, what kind of, returns the calls are going to bring you. But in order for that to happen, you must be patient. Point number 5, and this is purely, it's not what you do before you get in the trade, but it's also part of your trading. It's have conviction. So trade with conviction. Now, like I said, the other points, you do them before you get into the trade. You identify the trend, you plot on it, you confirm your plan, you stay patient. Point number 5 is really about mere conviction. Knowing I'm taking this trade, this is what I want to do. I'm not talking about delusion, I'm talking about conviction. There's a very big difference. It's Apple. All right, Apple gapped up. This is what I want to see. Now I'm going to take the trade. It's Amazon, hit our level of support, broke above the EMAs, came to retest the EMAs. Now I'm taking the trade. It's conviction. It's seeing Exxon and us saying, this is bullish. The US invaded Venezuela. Energy has been, outperforming the rest of the markets this year. I'm taking the trade with conviction. I'm confident in what I see. I confirm what I see. I'm taking this trade with conviction. It is not jumping into things anyhow and saying, you know what, I'm going to make some money today. No, it's not delusion. It's not the trade is down 70%, but I believe it's going to come back. It is not that. That is delusion. That's not conviction. If I see LMND stock and I say to myself, this gapped up, broke above my resistance, gapped up, pulled back to the EMAs and started to trend higher again. This is my setup. This is what I've been waiting for. I've been patient. I've identified the overall trend. This is my setup. I'm taking this trade. That's conviction. I look at the daily chart. I say, yep, we pull back to the EMAs on the daily. We're ready to break out again. Like I said, I see the 4-hour chart, similar story. I see the doji. I see confirmation of reversal. I'm taking this trade. I see the hourly chart and I say to myself, we're back above the EMAs. We're starting to break out again. We're going to go test this year's highs. That's conviction. And I take the trade. We swing it and we hit a banger. If you're trying to trade puts on this because you say, oh, it pulled back a few days ago, I think it's going to pull back again. There's no indication that this is going to pull back again anytime soon. Again, that's delusion. That's just you doing anything that's hitting and hoping. That's hopium. That's not real conviction. I'm taking this trade to the upside because of all the factors I just mentioned. I'm taking this trade to the upside because I've identified the overall trend. I've confirmed my plan. I know my setup. I know what I'm trying to do. I've been patient waiting for the pullback. I've taken all the 4 previous factors I mentioned and added this to the 5th one of conviction. So again, every single trade you take, you should know what you're doing. Every single trade you take, you should understand. Is this a clear trend here? Not really. This could break out soon, but I'm going to be patient. Is this a clear trend here? Well, it's a clear trend to the downside, so I'm not going to take calls, but I'm going to take puts here. If I have a stop loss in place, I should be okay. If I have a price target, I should be okay. If I have levels I'm watching, I should be okay. If you're trying to trade this without any kind of plan, I'm going to take calls, I'm going to do this, I'm going to do that. Guess what? This is looking, very bearish. It looks like it's getting rejected at the EMAs every single time. So it should be puts, right? And when I take the puts, I'm taking them close to the EMAs because we're focused on our entry price point, right? The entry. So again, all the factors I mentioned today, the 5 different factors, they're important. They're essential to your trading. I use them in my trading. Helps me trade with conviction. It helps me make money, obviously. There's nobody that traded with $150, turned it to $5,600 this year. I'm the only person that I've seen do that. I'm the only person I'm pretty sure that has done that. And the reason I'm saying that is because, again, a lot of people see those things and they think they're going to just trade anyhow. That's not going to work out for you, right? And, it's okay to take L's in the market. We're going to take L's in the market, let's be honest. But if you don't know what you're doing, if you can avoid those L's, it's a lot better, right? If you don't know what you're doing, you're just trading anyhow, it's not going to work out for you in the long run, right? There's a lot of people that have come and gone in the past, I'd say 5 or 6 years, because I've been trading almost 8 years now. Next week is my 8-year anniversary. But there's a lot of people that have come and gone, not because they didn't make any money in the market. They made money, but they didn't have longevity, right? They didn't know what they were doing. They didn't have a clear strategy. They didn't have a clear plan. They didn't know what to identify. The charting wasn't on point. The fundamentals, they had no clue, right? Again, people blow accounts all the time. Nothing wrong with that. But you've got to bounce back. You've got to change things. You've got to make sure you do what's best for you and your portfolio going forward. Last thing I'm going to say again is alerts are fine. Bots are fine. Signals are fine. Short calling is fine. But if you, as a trader who's taking any of those things, don't have your own plan, it's going to be very difficult to succeed. That's why in the Royal Trading Academy, we teach you how to fish, right? We don't just fish for you, right? We'll definitely throw you some fish, some bones here and there. Of course we will. We'll throw out bangers. But when it comes down to you and how you trade and your longevity in the markets, that's all dependent on what you do. So again, hopefully you enjoyed this video. Hopefully it convinced you to start, planning more things before you trade, implementing these strategies into your trading. And of course, if you did enjoy it, make sure to drop a thumbs up, comment, subscribe, and share with your friends and family, whoever. And of course, follow us on all the socials, TikTok, Instagram, Twitter, YouTube. Don't have any WhatsApp, no Telegram, no WhatsApp, none of those things. But yeah, catch us in the Discord as well. If you're not in the Discord, come and join that and be a part of it. But like I said, hopefully you guys enjoyed this video. If you're new to trading, this is your time to make it. 2026 is going to be an amazing year. But thank you guys so much for watching. That's it. I'm out. Peace.